Well, get ready to be super bullish right now because this little interview that Marshall just had and things that he was saying just a few days ago, man.
Here it goes, bro. I'm telling you, this shit is gonna hit 24,800 right now. I just heard the ding.
Yeah, shit.
Yeah. Wow, it's just about to take the highs at 24,650. Oh man. All right, we shouldn't pay attention to that. Yeah, bro. I hope this is gonna coexist with the thing that I'm gonna share with you about the VIX and the total cryptocurrency market cap as well. I bet you it's just gonna go hand in hand. And then with that document from Bitcoin Suisse and what they were saying about how the spring is coiling up.
Hand in hand, bro. Hand in hand.
All right. Well, for the people joining in and listening in, do you want to explain who this is, what this is, and how recent this interview just was?
Yeah. So this is the GAC. What does GAC stand for? Actually, again, I'm forgetting, but it's basically a credit union. Damn, what's the word? I guess right now.
Here, I'll look it up real quick so we don't sound like idiots.
Yeah, I don't want to. It's basically where a bunch of credit unions have come together at some location, right, where they're getting on stage and they have different panels. All those panels are private, but this credit union broadcast sets up shop at this event and has sit downs. Last week, we shared the sit down with Frank Mazza. And just yesterday they posted this sit down with Marshall Hayner. So this was from like a week ago or a week and a half ago. And yeah, pretty much there was, we're not going to be able to see those panel discussions. There's no recordings of those, of like the panel private discussions, but CU Broadcast is broadcasting and showing their sit down interview and some of the things that were said and some of the things that Marshall says in this snippet is just extremely, extremely bullish. And to be honest with you, it's the first time I've ever heard this type of bullish talk track from Marshall. But yeah.
This is what the GAC is. It's the American Credit Union Governmental Affairs Conference. That's what GAC stands for. And it's where over 6,000 participants, industry leading experts from credit unions came and joined in the event from March 1st to the 5th. So it was at the beginning of this month, so relatively recent. And Metallicus was obviously, of course, there front and center, along with a whole bunch of other major partners like Investify. We covered a little bit about this the other day on our Friday call with Frank Mazza and some of the things that he said as well, because he was interviewed by this gentleman here from the CU Broadcast. I'm excited. This is actually the first time that I'm hearing this podcast that you're going to play right now. So, but yeah, just in a nutshell, so everybody knows what this event was. It just recently happened. Metallicus was one of the lead sponsors there. And yeah, some super bullish information came out of this event in regards to Metallicus and just kind of what they've been building and what they've been doing and partnering with the credit unions over the past consecutive couple of months. So yeah, let's bend our ear to what Aqua has to share with you guys today.
Yes, sir. Let me blow up my screen here and we'll get this started. So it's about 15 minutes, but it's all good talk track. So it's worth every minute to listen to it all. So
raise my finger, bro, if I want to say something in between, because I know that he's going to say some stuff we got to talk about in between things.
Yeah, let's run it for sure. I'll let me know and I'll pause it. So here we go.
Check out a new episode every week on Tansley Stern's Despite and Possible podcast. Now on to the show. Studio Lounge interviews at GAC, brought to you by these fine sponsors. Mike Lawson here with CU Broadcast. Welcome back to our continued coverage of the 2026 GAC here in Washington, D.C. And look who we have back in the Studio Lounge, Mr. Marshall Hayner from Metallicus. I'm starting to call you guys meticulous because you're very, very precise in what you guys are doing. So
Thanks
what's Metallicus?
Thanks for having me back, Mike. Yeah, some people call it meticulous Metallicus because we are pretty meticulous with everything we do.
It's all good.
So, yeah.
All good. Well, I appreciate what you guys are doing for the industry, and yeah, you guys are helping push that proverbial envelope, especially in the stablecoin arena that everybody's talking about. And we were talking before the recording. Like my last 4 interviews have been like stablecoin focused, so we're including yours, sir.
Yeah,
including
thank
yours.
you. Yeah, it's grown a lot since we last spoke. You know, just last year, the interest we were talking before we started here, but the interest has grown exponentially. There's so much happening in the blockchain space, and just in the short course of it's only been 4 months or 5 months or something like that. We've watched institutions start to adopt, banks and credit unions are adopting, and now we're on the eve of the digital asset regulation with the Genius and Clarity Act, and the NCUA has just issued new guidance. The OCC issued guidance last week. It's all happening right now. Yeah,
we just had the NCUA chair, Carl Hotman, in here. We were talking about stablecoin as well and where that's headed. And so, yeah, very interesting times we are in right now, sir. So I'm going to ask you the most obvious question, and I think we both know the answer, but I love getting your take on it. But what's the attraction here? So why is stablecoin so hot right now?
It all comes down to what I would say DeFi. I think that DeFi is the revolution in finance. It's taking the traditional financial products and rails and decentralizing them, making them global, interoperable, 24/7, without the need of necessarily a human intervention to do everything. And in doing that, it's made lending and borrowing rates more dynamic and efficient.
No doubt.
And really, crypto is good for many things, has many values and uses. I think, payments is one of them, e-commerce, digital identity. There's so many different areas. But when people ask me, what are people doing with crypto? Why should I use crypto today? Besides owning a Bitcoin or owning some digital assets, using decentralized finance to leverage that, to become a lender or a borrower, to be able to lend digital assets and, for example, maximize yield on, for example, if you're lending, maybe you're earning by being a lender using the Metallicus loan protocol. You can also borrow a little bit and stake it and optimize on top of that. There are opportunities with finance that are, when you're used to seeing a rate of, I could get 4% or I could get 3 or 4%. Well, DeFi has blown way past that. People are, if they're not getting 8 to 10%, then they're not really happy with DeFi. And I think that traditionally, the only places that you used to see that were like hard money lending.
So I'm sure you sit down and talk to credit unions all the time. So
what's up, bro?
Wow, bro. Sitting there pumping Metallicus app at a freaking credit union conference, my G. That is crazy.
And just highlighting DeFi, like we've been highlighting that for years now. And for somebody of his caliber to say that is just like, man, we've been spot on with our analysis this entire time.
That is pretty insane. Wow. Yeah. That was good stuff there.
Yeah.
What's the initial conversation like getting a credit union started down this road? Because I'm very curious about this, because we're notoriously a conservative industry, if you haven't discovered that by now. But once the ball gets rolling, it really snowballs. And people, once they see something working and working really well, it's a big time snowball effect. But I'm really curious to those first conversations that you have with credit unions, what those are like.
Yeah. So, I would say there's probably 2 different buckets. And one bucket is credit unions that are coming in, that are very interested in the technology, that have done the research or maybe are just starting to do their research. And they come and they ask us, what's this all about? What's a stablecoin all about? And for that, we started 2 years ago with our Metal Blockchain Banking Innovation Program. And that program has grown tremendously since we last spoke. We're almost overwhelmed with the reception of credit unions coming in.
Good problem to have.
It's a great problem to have. And so we train credit unions, the executives, about crypto, everything from just the 101 and training.
Fantastic.
Training the teams to going to deployment, to launching Metal API, to launching their own branded stable coins. And the second bucket, I would say, are those that they're really ready to launch. They've done their research, they've looked at all the different vendors, and they come to Metallicus because they see that we're full stack, that we've built our own exchange. We're the only DeFi BSA DeFi platform, BSA compliant DeFi platform in the world. So we're the only one.
Really?
Top 50 as well. So we're rising up the charts very rapidly. I think we're sitting next to, thank you, we're sitting next to XRP, Ripple now, and Algorand, some other huge chains, and we're kind of the Mighty Mouse coming up the charts there. But yeah, there's a tremendous amount of interest on both sides, from the credit union side, to stay ahead of the curve, to be part of the future of digital payments, because this is where payments are going. And you see that with, Visa and MasterCard and Fiserv. I saw was on the floor. They have their FiUSD offering. Yeah. In the future,
TrueStage just announced their
TrueStage has their
stablecoin
issuance. So in the future, how are all these things going to work together? How are they going to be interoperable? How could FiUSD work with your credit union stablecoin, work with USDC? Well, Metallicus has built the solution. It's not just, this is something we're working on. This has been live for years now. And like I mentioned, it's steadily rising up the DeFi ranks. If you go to DeFiLlama.com, where a lot of people are tracking DeFi protocols, you'll see us. I think it's like number 45 or number 46 and rising. And I think it's valuable for credit unions and banks to be able to participate in this, but to do it in a regulated way and safely. And that's the difference.
Well, because I'm asking folks, ever since TrueStage came out with their stablecoin issuance, and they're going to offer it to all of their credit union clients and stuff. But anybody can be a stablecoin issuer, right?
Right.
But they have to go through certain protocols, right? So, so as a result of that, is there going to be like 10 million different types of stablecoin, or is there going to be one or two that kind of percolate to the top that everyone's going to use, or you guys are going to be kind of that underlying conduit for all these stablecoins to go through? And I don't know. I'm trying to picture it in my mind how this is all going to play out here in the next couple of years.
Yeah. Let me give you my.
If that's possible to answer.
Yeah, absolutely. Let me give you my opinion of, I think, where the future is going and what I see happening for the industry. There's, I think, 4,500 or around 4,500, 5,000 credit unions in the U.S. Yeah. Each one of them could have their own stablecoin.
Right.
And the problem prior to Metallicus' offering was fragmented liquidity, which is, I think, what you were alluding to. If everyone had their own individual stablecoin, wouldn't that be complicated? Yeah. Wouldn't that be overwhelming if I said, hey, I want to send you, my St. Cloud stablecoin, but you have, XYZ credit stablecoin. Yeah. Well, how do they work together?
And you over there have 1, 2, 3, and so on. Yeah.
Exactly. So we thought through this. We saw this coming, as well as the regulation, the new NCUA guidance, the new memo that Kyle put out and the team, and we saw one from the OCC last week. We have been not only instrumental in, being instrumental, I would say, a big advocate for pro-regulation. We have been pushing a lot of these different memos and guidance. We've been, really trying to say, hey, the industry should embrace this while we simultaneously build our product around it. So that's one of the great things about Metallicus being an older company. We've been able to watch everything evolve and flow, and through that, we've gotten very good at predicting where the future is going to go. And I think, big prediction is, you're right. I think they all will have their own stable coins. Some, like TrueStage, might be a consortium stable coin where maybe it's a few together. But ultimately, they're going to interact, where they're going to be one-to-one and interact. And that's what Metallicus is building. And in the future, you won't have to think about, oh, how do I convert my stable coin to yours? And what are the fees? And where do I do that? No, you'll just open the WebAuth wallet and I'll just send it to you. And you can freely move it to any one of the stable coins that you want, whether that's USDC and or your credit union or PayPal dollar. And soon it will, with the MetalPay API, with our clients that are going live, you'll be able to deposit it right into the checking account without any middleman, without Coinbase, without anyone in the middle.
Beautiful thing.
Right to your checking account and withdrawal as well.
So it's just like me giving you $1, but it's digital and it's
and
all
global,
equal,
and 24/7,
and immediate, all that good stuff.
Exactly.
Oh my gosh.
It's going to jump right over faster payments like Zelle and Venmo and all these things, and that's why you see ultimately. That's why PayPal has the PayPal dollar in Venmo now. They're preparing for that future of payments. When PayPal dollar initially launched, they were really struggling. I think, like many credit unions that are talking to competitors to Metallicus, they say, here's your stable coin, and okay, good luck, figure it out. PayPal's a larger company, and they were able to hire a crypto team, and they started to say, oh, let's put the PayPal dollar on Curve Finance and Balancer. But this is really advanced stuff that maybe not every credit union, not every bank is ready to do. And so that's what you get with Metallicus, is we recognize that the credit unions want to not only be educated on this and have the great technology for their members, but we got to make something that works together for everyone.
Together. Yeah. Sure. I mean, that's really cool that each credit union can have their own stablecoin, which is really neat. But yeah, my question, and you answered it, is just that unified conduit or whatever that connects it all together and makes it all equal, and everyone has equal amounts or whatever the terminology would be. So
exactly. And that's really the vision behind Metal Dollar, which we started the whiteboarding this product in 2018, so it was almost like 8 years ago. We saw that's how early we were planning, and we saw it. And even at that time, that was 2 years before I helped introduce the Cryptocurrency Act 2020. Now we have the Genius Act. I didn't know at the time anything about Washington D.C. and how bills work, and this thing called pork, and how a three-page bill turns into 84 pages, which is what we've got today. But I'm happy with the Genius Act as we have it today. I know Brian is here in DC. Brian Armstrong from Coinbase is, talking about, debating, can we offer interest on stable coins that are, say, parked on a centralized exchange? I don't think any of that matters. I think we shouldn't hold up these bills to benefit one company or the other. Now, some people will say, well, he's fighting, or other people are fighting for this technology. Well, in my opinion, the technology was going to happen no matter what. I say blockchain is kind of like Pandora's box, because now that it's opened, it can't be closed. And so whether centralized platforms can pay some sort of dividend or something like that on the stablecoin, I think that's kind of irrelevant. It should be happening on the blockchain. And when you go to your credit union, you want to use all the products and services of the credit union. I don't want to see blockchain take any of that away from the industry. I want to see it enhance the industry, right?
Yeah. I totally agree with you. I think that's what it will do. So I'm hoping those are the plans for sure. But I think we're on the right path for sure.
Exactly.
So good stuff, especially when we have really cool folks like you and others out there leading us down the right path to take in this area. So good stuff.
Thanks.
Alrighty, sir. I could talk to you all day long about this. I know you could talk all day long because you do talk about this all day long. But anything else here to add to wrap up here, or maybe a quick outlook for 2026?
Sure. Yeah.
If you can.
Absolutely. I love doing predictions. So my predictions for this year are, right now, all markets are down, right? We see the stock market is down, crypto market's down. So now is a time when there are a lot of people building. There's a lot of stuff happening in the background. You may not see it because it's not as loud, although I would argue it does feel kind of loud, even though the markets are down. Things are going to change over this year, where the market goes in up and down cycles. The next, I guess, bull cycle, you could call it, we will have this technology embedded into the credit union. So this year, my predictions are you're going to see the first MetalPay API and Metallicus integrations go live in credit unions. We're going to begin to see the credit union and banking world get much more integrated with this tech. I predict by this year you will see the first credit union and bank-based stablecoins due to the new legislation passing. We're going to see some winners and some losers. And the losers are going to be the ones that fail to have interoperability and compliance baked into the chain. So I think by the end of this year, we'll see the first credit union and bank-based stablecoins. The Genius Act and Clarity Act, I believe, will pass. I think the guidance from from Chairman Kyle Houtman at the NCUA is fantastic. There's some things I have some comments on, but overall it's very good. And I think it's going to go through. And in doing that, we're going to have the next crypto bull run, if you call it, will be the institutional bull run. So it's going to be very exciting.
This never ends. Never ends. Makes your job very exciting, though.
It does. Never a dull day.
No doubt. All right, Marshall. Well, thank you.
Well, that's it, bro. Institutional bull run. Metallicus will be embedded in the credit unions. Bro, it doesn't get much more bullish than this.
Talk about considering portfolio reallocation. He said the losers will be the blockchains that don't have compliance baked in.
Yeah, 1000%, bro. 1000%. And we've been saying this.
He also said a second ago that the loan protocol, the Metallicus app, are the only DeFi BSA compliant protocol it's in the world.
In the world. The whole globe.
That's crazy, bro. Wow. What a freaking interview.
Yeah.
That was wild. If people are not paying attention to Metallicus after that one.
And he's not capping too. Nothing that he said was cap as far as them being the only compliant one in the whole world. You know what I mean? How many other people can say that? Nobody really, because they're the only ones that are compliant at the moment. BSA compliant, that is. So
that his last statement leads me over here to this post that I put on Twitter. I'm gonna share my screen. Let me just go over to
let me stop sharing mine actually.
Real quick. Okay, and it was this document here from Bitcoin Suisse that I put out the other day. Shout out to the Cypress researchers for this one. They put this in the chat the other day, and I was reading through it because it's from March 2026, and some very interesting highlights. Here it goes on to talk about, by the way, Bitcoin Suisse, obviously, of course, you know, a large industry-leading expert in this space, institutional investor allocator in this space. And look at what they say. It says, crypto remains schizophrenic in this current phase. It participates in hard asset narratives over full cycles, but still trades like a risk-on barometer and stress-driven windows. Current drawdowns are cyclical, not existential, and should geopolitical tensions stabilize, ETF flows normalize, or the Clarity Act accelerate, the setup favors reallocation. And then right here, it says the crypto market enters 2026 as the only major asset class still trading at a meaningful discount. Price pain is largely behind us, and they put this out in March. What remains is time pain. So that means that we could operate in a phase of consolidation or range bound where maybe we do see some lower prices, but not too substantiating compared to the drawdown that we've recently seen.
Mm-hmm.
Meanwhile, it says fundamentals continue to strengthen and the setup is rare and the spring is coiling. So I said in a nutshell, like they're kind of telling you to buy the dip here in this document.
Yeah. Yeah.
And then today I was just doing some back testing on the VIX. So I put this post out, and this goes hand in hand with what Marshall said. And I want people to really consider what Marshall Hayner just said, that this next bull market cycle that we enter into, and me and Aqua have been saying this for some time, it's going to be an institutional cycle. And we have never seen that in crypto for the last 17 years of being retail participants in this space. Now, some of us might not have been retail participants in this space. I've been a participant for 10 years in this game, but we have never seen institutional adoption at scale. When we supersede $5 to $7 trillion, think about it. We're never going to see a $2.3 trillion market cap opportunity entry ever again. Because even if we were to go to $5 to $7 trillion and we were to lose $2 trillion again, it's not going to pull back to $2.3 trillion.
Right. Right.
So think about that opportunity. This is a crazy time to be alive. So check this out. I said a chart everyone in crypto should be paying attention to. There's a macro relationship that continues to show up across every major crypto cycle. Every time the total crypto market cap bottoms and begins a new bull run, something else tends to happen at the exact same time. The VIX, or the volatility index, peaks and begins trending down. Why does this matter? The VIX measures fear and uncertainty in traditional markets. When the VIX spikes, it means risk sentiment is stressed. But historically, once the VIX stops and starts declining, it signals that fear is leaving the system and risk appetite is returning. That is when capital begins to rotate back into risk assets like tech stocks and crypto. This is why the VIX is one of the most underrated charts crypto investors should track. Sometimes the biggest edge doesn't come from staring at altcoin charts. It comes from understanding macro sentiment and liquidity flows. Every major crypto expansion phase began shortly after the VIX topped and started declining. And I gave 2 screenshots of the VIX charts and the crypto charts with some yellow dots. And so I want to go over and show you guys this inverse correlation and where we're currently trading at right now. So over here on the right-hand side, we have the VIX on the monthly time frame. Let me just expand my charts a little bit so you guys can see this all. All right. And we have 1, 2, 3, 4, 5 yellow circles. Now notice how every single time the VIX has been above the 25 threshold, all right, we come up into this territory of, we'll call it oversold, okay, or excuse me, overbought, okay. Vice versa, if we look at the total cryptocurrency market cap, we have the same yellow circles plotted, except inversely correlated in oversold territory at market bottoms. So just as an example, the first yellow circle came in April, well, let's say a time parameter from March 2020 to roughly around April 2020. It's the same exact time that the VIX had topped out and started to decline. And look at this massive bull run that we went on after that took place. The second circle on the total cryptocurrency market cap from roughly around September 2020 to December 2020. If we look at the VIX, same thing. The VIX topped out September 2022 to December 2022, and we started to see a bottom. The next yellow circle, March 2023. Look at the VIX, March 2023. The VIX topped out. Crypto started a substantial bull run. The fourth yellow circle is right here on the VIX when the VIX was overbought. Same thing. You can see in the total cryptocurrency market cap, we saw an oversold territory. And right after the VIX started pulling back and retracing, crypto went on a parabolic run. The last circle here comes in April 2025 at the exact spike that the VIX had up into the 57 to 60 threshold. Once the VIX started pulling back, same thing. Crypto went on a parabolic run. Now look at where we're at today, okay? The VIX recently had a huge spike to the upside, has recently cooled off and started pulling back. Now, I'm not saying that the VIX, considering all of the macro uncertainty that still exists in the current landscape in which we're operating in, couldn't go higher, because it could, which is why I'm telling you guys that we still could see either a period of consolidation where we just trail sideways at these current prices for some time, or we see some more liquidations to the downside. But nonetheless, every single time the VIX has been above the 25 parameter and started to pull back, it has signaled a massive bull market cycle. And so recently, we've seen a huge, massive depreciation in crypto at the same time that the VIX has been spiking in volatility to the upside. As soon as this thing starts to pull back, we're likely going to see another bottom in crypto. And just like every single time the VIX has pulled back substantially before, the crypto market has made another leg higher. So we can assume, considering what Marshall Hayner said, considering the fundamental backdrop and the architecture in crypto that has now been laid out for institutions to really flood in, that this is the last pullback. Even if we do go slightly lower, this is the last pullback to get in before these institutions flood the F in, bro.
And they're going to raise the tides so high once they're in that these prices that are here are going to be once upon a time prices, never coming back. It's going to be a new ground floor with that institutional money in here. And again, like, you're never going to see these prices ever again, in my opinion. So
it's been very interesting to see this correlation. You know, if we do see the VIX go higher, then be prepared for more pain in the crypto ecosystem. But if the VIX started to trail back below the 20 threshold, then that to me would signal that the bottom for sure is in crypto, and we are going to start to see a massive recovery. Nonetheless, right, in our community, we have institutional dark pools that we've been paying attention to. We have some levels to the downside that we're being mindful of. below the $2 trillion threshold, coming in at roughly around 1.71 trillion to 1.84 trillion as other levels that we could see crypto dip down into. But regardless, right, I've been an advocate of saying that we've recently seen the second largest pullback in crypto history. The first one, obviously, of course, being from 2021 down to 2022. This was a $2.3 trillion pullback in crypto. If we clone this and mimic it, we've recently seen a similar drawdown, slightly smaller at 2.2 trillion. But something else that I've also been mindful of is, bro, look at this freaking correlation. You cannot make this stuff up. Okay, check this out. Let's go down now to the weekly time frame, Aqua, bro. I'm going to show you this. So what I'm going to do is I'm going to clone this whole entire area of price action and copy it over to this area of price action and show you the correlation. So we had a run higher, a pullback, and a bullish move higher. And we had a retracement, a bullish fake out, and a dump lower, and then consolidation, right? Watch this. I'm going to take it, clone it, and then just put it over here. It is literally the same exact price action. We had a bullish run, pullback. Here's when that VIX level bottomed out. Crypto went on a bull run. We see a pullback, bullish fake out, last dump lower. So now, this is my thesis, is that we are either in this consolidation phase or we're going to slightly see some lower prices. But nonetheless, just like that document from Bitcoin, we said we are in the coiling up phase. Well, we're about to see another move higher, like this bullish extension. And if we were to repeat this schematic, if I was to just clone this as well, considering that this price action is exactly the same, and put that here, that puts us at around $6 trillion in market cap via the next leg higher.
Damn.
Right? It's the same exact price action. You can't make this up. I didn't change anything. I didn't edit or add anything. I literally just took this price action from roughly around 2021 till 2023 and put it over here to this current market cycle, and it's identical to the current price action. So what were you going to say?
I was just going to ask you, do you think maybe because this is institutional money, we can take that piece that you cloned to the top side and maybe do 3 of those, 5 of those? Because it's institutional money now.
I'm going to be honest, bro. You know, I really truly think that they're going to cause as much pain as possible. And then when they're ready, they're going to come in so heavy that it's going to blow some people out of the water. And the people that have been studying and have been tapped into, like the researchers like myself, Mr. Man, you, Smoke, all the ones that have been reading the documents and seeing that this is building out and it was going to take some time and eventually it was going to happen. We're not really going to be blown away, but there's going to be some people that are going to FOMO in because of how fast the market moves back to the upside when it really does happen.
Yeah.
Because it's going to be very aggressive when it does.
Yeah. Yeah. I mean, I'll just be honest with you. My mind just can't stop thinking about Marshall talking about institutional money, and all of these moves are all retail money. So I'm just going to throw that out there that I could see with the institutional bull run and move, I could see a potential to $15 trillion market cap in crypto. Just throwing that out there. It's just my opinion. But when you got institutional money jumping in, it's different than retail money.
I think
go ahead.
Considering that retail has been driving the space for the last 17 years. Like all of this price action, collectively speaking, is retail money. All of it.
Yeah.
I mean, there's obviously, of course, been, hedge funds, asset managers, small family offices, that have billions of dollars allocated to this space. But I'm talking about systemically important financial institutions allocating 2 to 5% into this space for the first time ever, or large asset managers, hedge funds, family offices with $500 billion plus on the balance sheet that have never allocated to this space are about to very soon.
Yeah.
And pension funds, freaking, the list goes on, and none of that's happened yet. And when that does, I think that making predictions on where this market is going to go is honestly nonsensical. The best thing for us to do as retail investors is just to understand the opportunity that we have, and that we're not going to get an opportunity like this ever again. It's just like the stock market. You know, the stock market's never going to trade below a certain threshold, even if it were to draw down 90%. It's
Right.
never going to go back to the 2000 to 2005 lows ever again.
Right.
You know?
Right.
Even if it were to retrace 90% of its value, it's still not going to go back down to those lows. We're at that point right now in crypto.
Exciting times, bro. Exciting times.
110%. And then back to what Marshall said, to throw on another layer of preparedness, we should be earning more shares of these coins in this market downturn by utilizing regulated DeFi platforms like the Metallicus app, like the Loan Protocol. Those are the people that are going to come out on top in this next bull market cycle, right?
Yeah.
The people are just using the market's money to compound, to earn interest, to earn yield, to stack more. So that way, when the market does recover, you have more coins. It's like, honestly, makes logical sense.
And you're already tapped in. Once these prices do go to crazy institutional prices, you are already tapped into a DeFi cash flow for yourself, and you're going to be observing the market way different than somebody who's just hodling, trying to time when they're going to, you know, exit the market and, you know, drop the ball. Knowing DeFi, you're going to be able to be in this game for the long haul. And yeah, I feel like you'll be able to take advantage of all of the prices going up when you're tapped into DeFi, as opposed to just exiting and then doing whatever you do after you exit and then regretting and seeing the market go much, 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 much higher. So I feel like having that DeFi game plan in play is just, there's so many perks to it, you know, long-term price and cash flow for yourself as well. So
who was that one guy that we shared that one time? I think it was the co-founder of Tether, if I'm not mistaken. Wasn't it the guy that said that the amount of people that are not going to be able to time the market properly, that would just be better off earning yield over the next 5 to 10 years on their digital assets, will come out more on top than people that will try to time the market? And honest to God, this recent market pullback was just a perfect example. Like, ask yourself the question, I say this all the time, how many of you guys were able to sell the exact top in this recent pullback? Most people didn't sell the exact top. And so if you didn't sell the exact top, what was the best strategy to compound against this volatility? Is to earn yield this entire time.
yeah.
And compound that yield.
He even said that they don't even know how to time the top perfectly. Tether themselves. And these are, you know, this is the most profitable company in the fucking world, as a matter of fact. So
it's going to be very interesting, bro, to see how things pan out. Anyways, bro, what a great podcast shared today, bro. Thank you for that. That was phenomenal. Let's jump off and hop on a call with the private community and see what's up with them and go from there, bro.
let's run it for sure. I'll see you on that private call with the community, bro. Thanks for everyone tapping in. Much love.
Blessings to you guys. Everybody take it easy. Peace and love.
Peace.